All right, I'm going to start off the video today, and I'll note one more time that I'm going to keep that $5 for your first month subscription to the premium SMT newsletter. I'll keep that open for a few more days. There's still a time to get in on that trade that I was talking about in my previous video. I think for risking a small amount of money, I think you can, at the very least, you're going to make enough to afford an entire year's subscription to the SMT off this one trade. Again, I don't think the opportunity has passed yet. So just you can either, I'll provide the link in the description below for those of you on YouTube. If you're on the SMT free blog, just click on the orange sign up link to the right of this video and go on and to the premium site, create a monthly subscription. Your first month will be $5, and then you can access all of the premium content, and I'll point out where you can go to find that trade that I'm talking about. So again, I want to just look at what's happening in the dollar, and then how I think it's going to play out in gold specifically, and probably stocks as well, maybe also energy. So this has been my, in my last video, I pointed out a few markets that are primed for regression events. They're just stretched too far away from the long-term mean. The main driver, I think, of a lot of these moves is going to be the dollar. And the dollar has come up. We got, a minor breakout above resistance zone. And let me expand this chart just a bit. All right, so here's what I'm talking about. We've got this, it's now a triple top at about, let's just call it 104, more or less. I warned people to be cautious that this could probably happen, that we could get a breakout, but then smart money would sell into that breakout, and then the breakout would fail. And that could kick off an intermediate decline. And I've noted this in several of my previous videos as well, that these breakouts that occur late in a cycle, very often they tend to fail like this. They just don't produce a sustained move. And if we assume that this is an intermediate cycle low, which is somewhat questionable, then this breakout is occurring very, very late in an intermediate cycle. And if you don't consider this an intermediate decline, then the last confirmed one is way back here, which makes us even later and less likely to give us a sustained move. So the dollar did kind of pretty much what I warned people was going to happen. It was going to break out, convince everybody that a big move was starting, and then the smart money, the banks, would sell into that breakout, and it would reverse, and you'd get a bunch of people holding the bag here. So my feeling is that at this point, I'm going to need to see just a little bit more, but this is starting to look like a daily cycle low right here. My assumption at this point is that this daily cycle will finally left translate, and we'll get a move down into an intermediate cycle low, and that means that somewhere here it's going to this cycle is going to top. Maybe it even topped today, although I don't know that the odds are great for that. It's a little early, but I guess it's possible. But I think at some point here it's going to top, probably before it gets back up to this resistance zone, or maybe when it hits this resistance zone and then it gets rejected. And then we roll over, we get a left translated cycle that makes a lower low and confirms that we're in an intermediate decline. And that's what an intermediate decline is. It's a pattern of lower lows and lower highs. So I'm expecting this rally is going to make a lower high. I don't think it's going to be able to push above this high here. And then at some point it's going to top, roll over, and come down and make a lower low. And we'll move down and make an intermediate cycle low. And based on the extreme distance that price has gotten stretched above this 200-day moving average, I don't think it's at all out of the question that the dollar could come all the way back down and test this 200-day moving average, or maybe even drop a little below it during this intermediate decline. All right, so now as that pertains to gold, and I've said this before, if we get an intermediate decline in the dollar, it's going to be next to impossible for the cartel to keep gold suppressed. They've got a little opening here as the dollar rallies out of what I think is probably a daily cycle low, in that they've got gold trapped going sideways, but so far they have not been able to successfully push gold back below this 200-day moving average, and I don't know that they are, but they do at least have it trapped going sideways. But I think they're going to have trouble keeping this suppressed if the dollar does indeed roll over and start an intermediate decline, and in that case, then I would say there's at least a very good chance that we come back up and test this. I guess at that point it would be a triple top, and you could make some, even some decent money off of a move like that. It doesn't even have to break out and make a big run to make good money. You would make pretty good money just from if gold were to just run back up and test this again. And remember, it took multiple breakout attempts before gold could break out. What was it, back in 2010? Let's back this chart up and take a look. So I guess this was back in 2008. So you can see it took multiple tries for gold to finally break through that $1,000 barrier. 4 tries, as a matter of fact, before it finally did. But then once it did, look at what happened. Huge move, almost to over $1,900. So something similar could happen here once we do finally get a breakout above this. Let's call it 2090. And if gold isn't ready to break out, I think it could still come up here and test it, and even that's going to be a decent move. You can make some nice profits off of that. But the next thing I want to look at is the S&P, and this is in regards to that trade I've been talking about. As that dollar has rallied out of that daily cycle low, not only has gold stagnated, but so has the stock market's churning sideways. But I think stocks will also give us a nice rally. And I do think it's probably going to be a bear market rally, but I think it could go further than a lot of people are expecting. But I think that the stock market is setting up for a nice move higher as well. And I'm going to give you a trade that you can make some very good money, not have to risk very much money, and make some good money off of the move that I think is coming, not only in metals, but also in the stock market. And maybe we get a blow off top in energy as well. Although energy, in my opinion, at least the energy stocks anyway, are very dangerous. They are stretched a long ways above you can see it in this chart here. It's just obscenely far above this 200-day moving average. And the average retail trader that doesn't really know what he's doing, he's getting more and more bullish here, and the fear of missing out is becoming stronger and stronger. And the last time we saw that kind of sentiment was right here in Bitcoin. And I tried to warn people that this was dangerous, that price was stretched way too far above the long-term moving average. And granted, this is much farther than XLE, but this is a lot more volatile, and this was a bubble. I don't think XLE is a bubble, but I do think we are in the final stages of this 3-year cycle rally in commodities. So we could get let's call it a semi-parabolic move in energy stocks that just gets everybody convinced that price can't go down, and they just keep piling on, afraid to miss any of the move. They're trying to catch every last penny, and then they get caught at the top, and they get caught when you get the crash back down to the long-term mean. Let me go back to the chart of XLE. you know, as I said, this may not be done, but this is setting up the requirements to catch a lot of people when this thing crashes. So you got to, you know, if you're going to play musical chairs with this, trying to catch every last penny, you better have some kind of a trailing stop to prevent you from getting caught when the crash does occur. So this, well, I think this could have further to go as well. This is one of those markets I think is really dangerous, more so than metals, more so than stocks, and in kind of in the same category as the dollar. They're both just stretched way too far above the long-term moving average, and I expect sometime here in June we're going to get a top in energy, and then you know, all those people trying to catch every last penny are going to pay a heavy price for that. A very poor strategy. We got in back here in December, and we held all the way into you know, somewhere right around in here, and I told people, you know, you can either just be happy with your gains and wait for the 3-year cycle low before you go in again, or you can place a trailing stop if you want to continue to try and catch more of this rally. Just make sure you don't get caught when the crash comes. So I'll keep that offer open for a few more days. Just like I said, click on the link in the description if you're watching this on YouTube. That'll take you to the premium site. Create a monthly subscription. Your first month will be $5. If you're on the blog, just click on that orange sign up today link. Create a weekly subscription, and you can get in on that trade that I've been promoting.